Schwab U.S. Dividend Equity ETF, SCHD, has established itself as one of the premier dividend-focused exchange-traded funds, offering a combination of high dividend yields, dividend growth, and exposure to high-quality companies. Recently, SCHD announced its Q1 2025 dividend payout of 24 cents per share, marking it the highest ever first quarter dividend. This is particularly significant because historically, Q1 has been the lowest paying quarter for the fund. Now, what does this mean for investors, and how does SCHD stock compare against other dividend-focused funds? So first, we have to understand that SCHD aims to track the Dow Jones U.S. Dividend 100 Index. So it selects high-quality U.S. companies based on strong financial health, consistent dividend payouts, and growth potential. This fund focuses on sustainability and reliability, making it an attractive option for dividend investors. And if you take a look at the SCHD methodology, this fund selects stocks from the Dow Jones U.S. Broad Stock Market Index. However, it does not include any REITs. So it initially screens for companies and stocks that have 10 years of consistent dividend payments, a minimum market cap of $500 million, and a 3-month average daily trading volume of $2 million. Then the companies are ranked by its dividend yield. So stocks passing the initial screens are ranked by the IAD yield, the indicated annual dividend. And then the top 50% are eligible for selection. Then we have the final composite ranking. So they are then ranked by the equal weight composite score. And this is based on free cash flow to debt ratio, the return on equity, the IAD yield, and the 3-year dividend growth rate. The top 100 stocks are then selected for the index with a 4% cap per stock and a 25% sector cap. Stocks currently held in the fund are retained until they remain in the top 200 by composite score. So with that in mind, while this fund is diversified, SCHD does lean towards industries known for strong dividend payouts. And this includes sectors such as financials, consumer staples, and healthcare. And SCHD pays out dividends on a quarterly basis. So let's take a look at the Q1 dividend payout, which is almost 25 cents. This is the largest Q1 payout yet. Historically, SCHD's first quarter dividend has always been the lowest of the year. If we take a look at last year, Q1 was only 20 cents. For 2023, it was 19 cents. For 2022, it was 17 cents. For 2021, it was 16 cents, and so on. So every single year, the dividend has been increasing, especially for the Q1 payout. And this is a very good sign to see. This most recent payout of almost 25 cents represents a significant step up from the previous years. And this increase suggests that SCHD's underlying holdings are delivering strong earnings and dividend growth, allowing for higher distributions to investors. And we can also see that the dividend yield, annual dividend yield, has actually increased to 3.75% because of this recent payout. So because this Q1 payout was up 20% from 2024, it shows a strong upward trend. Even in volatile market conditions, SCHD continues to provide stable and growing payouts. We also have future growth potential with strong fundamentals in its underlying holdings. SCHD is well positioned to maintain and possibly increase dividends for the remainder of this year. And they are hoping to achieve that as they recently underwent the annual reconstitution based on this methodology. And it's very nice to see that SCHD has been growing its dividend ever since it's been incepted, with an average annual growth rate of around 12%. So while SCHD's dividend payments fluctuate around quarters due to seasonal corporate earnings and payout schedules, many companies distribute dividends based on the local fiscal calendars, leading to historically lower Q1 distributions. And if we compare this ETF to something similar to VYM, which is the Vanguard High Dividend Yield Index ETF, it has a lower dividend yield and a much lower dividend growth rate. Another popular one, DGRO, the iShares Core Dividend Growth ETF, only has a yield of about 2.24% with a lower 4% dividend growth rate. But while DGRO has a lower dividend growth rate, it does have pretty good stock appreciation, and it's up about 150% since 2014. Given the strong Q1 dividend payout, SCHD investors can likely anticipate continued dividend growth throughout the year. There are some key factors that can influence future payouts. Many of SCHD's holdings have stable cash flows and strong dividend policies. Sectors such as financials, healthcare, and consumer staples are expected to perform well in 2025. And we're also seeing rising dividends from its holdings. SCHD's underlying companies continue increasing their dividends, driving the fund's distribution rate higher. Now, here's some things to watch out for. So, even if corporate earnings decline, some companies might slow their dividend growth. We also have to understand that the Fed policy and interest rates will have an effect as well. Higher interest rates makes fixed income more attractive, possibly slowing ETF inflows. And market volatility, recession fears, or geopolitical risks could impact dividend as well. But overall, SCHD remains one of the best dividend ETFs for investors seeking a balance of yield growth and stability. With a record Q1 dividend payout, a history of strong dividend increases, and a portfolio of high-quality companies, it's an excellent choice for long-term investors. The Q1 payment is a record high and it signals strong dividend growth. It offers a compelling mix of dividend yield of 3.7% and high dividend growth rate. If you're a dividend investor looking for consistent income with strong dividend growth potential, SCHD should be on your radar for 2025.